Hello everyone, welcome back. So here we'll go for discussing about the activity ratios. The third type of ratios which we'll use under the ratio analysis. So ratio analysis will go for having the what is the financial position of the company. So under ratio analysis we'll go for discussing about the various types of ratios. In the previous videos already we have discussed about the liquidity ratios and profitability ratios. Now the third type of ratios are activity ratios. So here we'll go for discussing about the what is the meaning of activity ratios and what are the various types of ratios we will calculate under the activity ratios that we will discuss here. So now before going to activity ratios, so if you are watching my videos for the first time, please subscribe and click on bell icon. So save for the all notifications. Then you will not miss any video of my channel. So now let us discuss about the activity ratios. So activity ratios, the ratios are used for how efficiently a company managing its resources. So each and every business organization or a company will be having various types of resources like human resources, assets will be having plant and machinery, land and building. Various types of resources will be present for the company. So here activity ratios indicates so how effectively a company is managing its resources. Whatever the resources a company is having, how efficiently those resources are utilized by the company. So that we will come to know from the activity ratios. Whatever the ratios we will use under activity ratios, all the ratios will say about what is the efficiency of using that particular resource. That is the meaning of activity ratios. Now under activity ratios, we will go for explaining the relationship between the sales and the investment in various assets. So here in all the types of activity ratios, we will consider the sales of the business organization, the relationship between sales. So for each and every type of asset whatever we are having, so the investment what we have made in that particular asset, so the investment will be related with the sales of the company. So here we will go for explaining the relationship between the sales and the investment made in the various types of assets like working capital, fixed assets, capital. So whatever may be the investments we have given for various types of assets, all those investments will be compared with the sales, and then we will go for explaining the what is the efficiency of that particular asset with the sales. That will go for doing under the activity ratios. So now we will see what are the various types of ratios we will use under the activity ratios. The first type of ratio is total assets ratio, or it is also called as total capital turnover ratio. That is total assets turnover ratio or total capital turnover ratio. So here this is the ratio where we will explain the relationship between the sales of the company to the total capital employed. So what is the total capital we are employing towards the various types of assets? So the total capital will be compared with the sales of the business organization. So sales divided by capital employed. So this will give you the total assets turnover ratio or total capital turnover ratio. And the second one is working capital turnover ratio. So here we will go for comparing the sales with working capital. So as we all of you know that working capital is nothing but the capital which is required for short term purpose, or the capital which is required for day-to-day activities, that we will call as the working capital. So what is the working capital? How efficiently you are using working capital? That we will say from this working capital turnover ratio, where we will go for explaining the relationship of sales and working capital. And the third one is the fixed assets turnover ratio. So here we will go for comparing the sales with the fixed assets. So fixed assets is nothing but The assets which are used for the long term purpose, they are called as the fixed assets. So to know what is the efficiency of the fixed assets, we will go for comparing the fixed assets with the sales. So that will give you, that is called as the fixed assets turnover ratio. And the next one is stock or inventory turnover ratio, where we will need the what is the efficiency of stock or inventory. So inventory is nothing but raw materials, finished goods, or any other stock, whatever we are having. So what is the efficiency of that inventory? So that we have to know. So how we will go for knowing? Here we will taking cost of goods sold and average stock. So cost of goods sold is nothing but whatever the cost you are incurring for manufacturing and selling of the goods, that will consider as the cost of goods sold divided by average stock. So average stock is nothing but opening stock plus closing stock divided by 2. You will get the average of the stock. So by using this formula, we can calculate the stock or inventory turnover ratio, where we will measure what is the efficiency of stock or inventory in the business organization. And the next one is debtors turnover ratio. So debtors means the people who has to pay the amount to the company, they are called as the debtors. So debtors turnover ratio. So the formula is credit sales divided by average debtors. So here in case of debtors turnover ratio, we will consider the credit sales, because whenever we are having credit sales, then only debtors will be present for business organizations. So we will compare credit sales with the average debtors. So average debtors is nothing but opening debtors plus closing debtors by 2. You will get the average debtors. So if you are not having any credit sales, then debtors will not be present for the business organization. And the last one is the average collection period. So average collection period indicates what is the time period in which we can collect our money. So that is from the debtors. Whatever the amount paid by the debtors, in what is the time period in which we can collect that amount. That is called as average collection period. So the formula is receivables divided by daily credit sales or receivables divided by monthly credit sales. So these are all the various types of ratios which we will use under the activity ratios for analyzing the efficiency of various types of assets which are present under the business organization. So in the next video, we will go for seeing how to calculate these ratios with the financial information. Thank you.